Hello and welcome back to Explain the Charts. Today, on November 11th, 2025, we are taking a close look at Microsoft, ticker symbol Microsoft. There is a lot of conflicting information in the headlines, creating a complex picture for investors. On one hand, news outlets are highlighting Microsoft's longest losing streak in over a decade, which has wiped out a staggering $350 billion in market value. This seems to be driven by investor caution over the massive spending required for AI infrastructure. Adding to the bearish sentiment, Microsoft's recent Q2 guidance only met Wall Street expectations rather than beating them, which the market punished given the stock's high valuation. The company also disclosed a significant $3.1 billion loss from its investment in OpenAI, which trimmed earnings per share by 41 cents. However, on the other hand, the company is doubling down on its strategy, announcing a massive $10 billion investment in a new AI data center in Portugal. This signals a strong long-term commitment to leading the AI race, even if it hurts short-term profitability. We're also hearing about potential overvaluation with AP ratio near its 5-year high and capacity constraints for its booming Azure cloud service. So, the fundamental picture is a mix of incredible long-term growth prospects against very real short-term execution risks and valuation concerns. Now, let's see what the charts are telling us and how this narrative plays out in the price action. Looking at the full daily chart, we can see the broader story of 2025. The stock experienced a dramatic sell-off early in the year, finding a bottom and our current 52-week low around the $345 level in early April. From there, it staged an incredible rally, culminating in an all-time high of $555.45 at the end of July. This $555 level now stands as the ultimate psychological and technical resistance to beat. Following that peak, we saw a significant pullback, which corresponds directly with the news of the disappointing Q2 guidance and OpenAI investment losses. Notice this massive price gap down on July 31st, where the stock plunged from over $555 to open around $535. That gap represents a huge area of overhead supply and resistance. Since that earnings shock, the price has been in a clear downtrend, making a series of lower highs and lower lows. We can see a period of consolidation through August and September around the $500 to $520 level before another leg down. The stock established a significant support zone around the $495 to $500 area more recently. Let's zoom in on the action since the beginning of October to get a clearer picture of this recent turmoil. Focusing on the last 6 weeks, we can see the run-up into the late October earnings report, where the stock climbed back towards the $540s. Then, on October 29th, the market reacted to the earnings call, and the price gapped down significantly. The stock closed at $541.55 and opened the next day nearly $11 lower at $530.48. It continued to fall for several days, creating that longest losing streak, the news reported, finding a recent bottom near $496. This shows just how sensitive the stock is to any news that doesn't scream overwhelming success. The price has managed a small bounce over the last couple of sessions, now trading around $506. The critical question for traders is whether this is a minor relief rally before the next leg down, or the beginning of a true reversal. The area between $515 and $525, which was previous support, will now likely act as a formidable resistance zone on any further upward movement. Switching over to the 1-hour chart, we can analyze the recent price action in more detail. Here is the sharp sell-off on November 6th, taking the price from above $505 down to below $496 in just a few hours. The price then consolidated, building a short-term support base around that $496 to $498 level. Yesterday, on November 10th, we saw a strong push upwards, breaking through the $500 psychological level. The buying momentum continued into today's session, but we are starting to see it slow down around the $506 mark. For short-term traders, this level is now immediate resistance. A failure to break and hold above here could see the price rotate back down to test support at $500. On the 15-minute chart, we can see today's intraday story. The price gapped up slightly at the open and pushed higher, creating a high of day near $506.85. Since then, momentum has faded and the price has been consolidating in a tight range. Intraday support has formed around the $505 level. A break below this could signal short-term weakness and a potential retest of the low $500s. Conversely, a sustained break above the day's high around $506.85 could give bulls the confidence to push towards the next resistance level near $510. Day traders should watch these levels closely for confirmation of the next immediate move. So, let's go back to the daily chart and recap everything. The key price levels to watch are critical right now. Major resistance sits at the all-time high of $555, with a heavy resistance zone from the earnings gap between $530 and $540. More immediate resistance is at the $515 to $525 area. On the downside, we have immediate support around the recent low of $495. If that fails, the next major support zone is way down near $410, which was the consolidation area back in August and September. Here are the two primary scenarios as I see them. The bullish case, which I'd give about a 40% probability in the short term, is that the long-term AI growth story overrides the current concerns. If the stock can reclaim and hold above the $525 resistance, it would signal a strong reversal, with the potential to fill the gap up to $540. This would be reinforced by any positive news about Azure capacity or stronger-than-expected AI monetization. The bearish case, which I see as slightly more likely at 60% in the immediate future, is that the weight of the valuation and recent downtrend continues. A decisive break below the $495 support level would likely trigger further selling, potentially targeting the $450s or even that major support zone around $410. This scenario would be reinforced by broader market weakness or negative news from competitors. Moving forward, keep a close eye on any announcements regarding Microsoft's capital expenditures and progress reports on their AI product adoption. Thank you for watching this analysis on Explain the Charts. Please remember, this is for informational purposes only and is not financial advice. Always conduct your own thorough research and risk assessment before making any investment decisions.